Very good morning. It's a beautiful Wednesday morning. And yes, I think by now each one of you has actually done 90% of your cost accountancy. Now, the topics left is from my side is marginal costing and budgetary. So, this has been a beautiful journey of learning how do we study costing, what is the purpose of studying costing, and then slowly and gradually unraveling every aspect of costing. So why do we study costing? Simple thing that we need to price, right? So if I need to price this pen, then obviously I need to know the cost, right? And when we talked about cost, then we studied very important thing that we can study about costs on the basis of its element. That is, it can be material, it can be labor, it can be any expense called as overheads. Then we studied costs on the basis of variability, right? And then if all of you remember, you have actually studied that the expenses can be variable or they can be fixed in character. What is the characteristic feature of a variable expense and fixed expenses? Actually, you've been studying about this from grade 11th, right? From the time you have studied economics, you've been studying about this thing. So variable expenditure is an expenditure which varies with the production. I produce 1 unit, expenditure would be there. I produce 2 units, the expenditure will be for 2, 3, then 3. So that's variable. I call something as a variable expenditure if it is constant per unit. Look at my words. I call something as a variable expenditure if it is constant per unit, but it varies with units produced, right? For example, a telephone call, right? It's like every time you make a call, say, for example, you need to pay 1 rupee. Or you can say for every minute that you talk, every minute, per minute, you need to pay 10 paisa. Right? So if I talk for 2 minutes, I end up paying 20 paisa. If I talk for 3 minutes, I end up paying 30 paisa. Now here the core expenditure is constant per minute, right? So the measuring unit can be per unit, per hour, per kilometer, anything. But I call anything to be constant. I call an expenditure to be constant if it is constant per unit, per hour, per kilometer, per whatever is the measuring unit. And as we'll keep on producing more and more units, this expenditure will keep on rising. This is variable expenditure. On the other hand, there are expenditures which have nothing to do with production. They are for a period. For example, I enter into a rental agreement. I have to pay 10,000 rupees for a year. Now, whether I stay for 15 days, I stay for 1 month, I stay for full 12 months, if I have to pay 10,000 rupees for the whole year, then that 10,000 rupees stays. Means like, say for example, I've taken up a factory, right, where I'm going to produce goods. Now, the rental expenditure has got nothing to do with the units you are going to produce inside. You may end up producing 1 unit, you may end up producing up to your maximum capacity. But still, that expenditure will be incurred because it is relating to every year we'll have to end up spending rent. So the expenditure which has got nothing to do with production, it is related to period, we call it a fixed expenditure. And fixed expenditure always keeps on reducing as we keep on producing more units. So it keeps on reducing per unit, right? I will further explain you what do I mean to say, and then I will switch down to the topic. Okay. So for example, I'm saying Say, for example, this is the total variable cost curve. Yes, variable cost curve. If you look at the graph, you'll see, say, for example, this is 1 unit, right? And let us say the cost is 5. Now, if I produce 2 units, this is 10. Now, say if I produce 3 units, this is going to be 50. If I'm going to produce 4 units, this is going to be 20. So we'll actually look at it. The cost per unit is ₹5. You produce 1 unit, the total cost is 5. You produce 2 units, it is 5 into 2, 10. You produce 3 units, 5 into 3, 15. You produce 4 units, it is 5 into 4, 20. Now this is about variable cost. On the other way, on the other side, if I say that the cost is fixed, let's say ₹50,000. This is my total cost. And this is constant. You look at it, it's a straight line. So it's a constant line, right? It's a straight line. That means if you are producing 0 units also, you are incurring 50,000. And let us say this is your maximum capacity of 5,000 units. Then also the cost is 50,000. Why? Because this cost has got nothing to do with production. So if I'll try to make a per unit, this is total fixed cost. But if I'll try to make per unit what it'll be? For example, I produce 1 unit, 50,000 divided by 1. The cost is going to be 50,000 itself. Yes or no? It's going to be 50,000 only. 50,000 divided by 1. But say if I produce 2 units, then the average fixed cost will be how much per unit? 50,000 divided by 2, which is going to be 25,000. So that means if I produce 2 units, the cost per unit will come down to 25,000. Similarly, if I produce 4 units, the cost will come down to 50,000 divided by 4, 12,500. I produce 10 units, it will be 50,000 divided by 10, which will be 5,000. That means it is a downward sloping curve. An average fixed cost curve is a downward sloping curve. It will never touch the x-axis. It will never touch the x-axis. Why? Because the average fixed cost or the cost per unit can never become 0. But the moment I produce the maximum units, the cost per unit is going to become the smallest. Now, this was a reiteration of what all we have studied about variable and fixed. Now, why am I talking about all this today? Because today I am studying about marginal costing. So what is marginal costing? What is the difference between marginal and absorption? How do you take decisions with the help of marginal costing? We'll be studying various things from break-even point to indifference point to shutdown point, make or buy, key factor. So many things we'll be studying when we'll be talking about marginal costing, something which we have never done before. So for this, I would like to greet all my students who have joined. A very good morning, Rohit, Sumanpreet, Pooja, Jay, Kushi, Ria, Aarti, Shairam, Sunil, right. So the concept is that this particular topic which I'm going to teach you, first of all, the importance of this topic is, as you go up to CA final, the only few things you will be studying, and in that few things, the only topic which you need to know happens to be marginal costing. Because all decision makings are on the basis of marginal costing. So as the name suggests, marginal costing, right? The word marginal, what does it say? What does this word say? And first of all, most of the people say marginal costing, it's a chapter wherein there are certain formulas, you need to mug it up. And guys, please pay attention to what I'm teaching. If the fundamentals and the concepts are clear, I repeat, clearing CA is a cakewalk. People who are unable to clear the CA examinations, the very big problem with those students is that they think that by solving anything 3 times or by learning the steps, they will be able to clear the examination, or by studying for 16 hours is the mantra for clearing a CA examination. I want to tell all those students, I have never studied for 16 hours, and most of my colleagues who cleared their CA in first attempt have never studied for 16 hours. The reason why a CA student studies for longer hours is very, very simple. The reason a CA student studies longer time is because every time we need to write an exam, we need to write at least 4 papers together. Right? Now, those 4 papers, all 4 papers are not practical. For example, if I take up group 1, now group 1 has got an accountancy paper, it has got a costing paper, it has got a taxation paper, it has got a law paper. Now, how do you think law will come to you by just reading it? Law means that you need to know the laws, you need to memorize the laws, you need to solve case studies, you need to look at the various parameters. That's what lawyers keep on doing. They keep on reading. And all of us, if it is a May examination, we all start studying from February, because usually the syllabus gets over of our whatever we are studying, the subjects which we are studying, gets over by January. So we have technically February, March, April, only 3 months to study and 4 papers to give. Now, technically speaking, each paper requires in itself a self-study of at least 3 to 4 hours, right? And that too for at least 2.5 months, right? Each subject. So if there are 4 papers, I can't do everything on a day. You think that today itself I do standard, I do marginal, I do cost accounting system. How is it possible? We are humans. The brain can only work for a particular time. So I can't afford to keep on doing costing for like 12 hours in a day. I need to do, or I need to understand and study that particular subject in a proper manner consistently for at least 2.5 months, right? And every day I need to give some 2 to 3 hours to that particular subject. That's the right way of studying. Usually I've seen students doing what? They study a subject, leave it, then go up to the next subject, then leave it. Now what happens is something which you have studied in the month of February, by the time it is April, you've forgotten it. That's a wrong attitude. Right? You need to prioritize. You need to actually think on your techniques of studying, right? So for that, if you have to study something for 2.5 hours regularly, and that too every day you should give to 2.5 hours. So practically speaking, if there are 4 subjects, you by default have to give 10 hours to that subject. Now, the reason why people end up spending 14 hours is because the concentration level of every person cannot be like 2.5 hours means 2.5 hours. Aisa nahi hota. A person is like studying for like 3 hours, 15 minutes, then the productivity is of around 2 hours, 15, 20 minutes. 1 hour is idle time, wastage. Sometimes it is controllable, sometimes it is not controllable. Sometimes it is controllable is the acceptable normal time, and the time which is not controllable, not controllable means, which is controllable, we could have avoided it, is the abnormal time. And that is the reason if you are actually sitting down, somebody sits down for 3 hours and does the productive work for 2.5 hours. So they end up studying for like 12 hours, 4 subjects. And people who have a capacity or who end up doing a larger idle time, they end up studying one subject for like 5 hours. So they end up studying for like 20 hours in a day. So crux is you need to understand how do you need to plan your studies and what do you need to study. And today the topic which we are reading is only telling you that costing is all about taking up decisions. Costing is all about understanding the cost and then realizing that, okay, I need to do absorption costing. I need to do absorption costing for the purpose of finding out per unit cost. Now, what is absorption costing? It is nothing but that cost sheet which you people made. In the cost sheet, you had all the expenditures, material, labor, factory overhead, admin overhead, selling overhead, all the expenses, fixed plus variable, all expenses. You had put up on that, you have collected on that cost center, divided it by number of units, and you got out with per unit cost. That's known as absorption costing. Now, why it is absorption costing? Because you are absorbing fixed and variable overheads on per unit. You're absorbing all expenditures which you're doing on a per unit production in order to get out with per unit cost. That's absorption costing. You need to do this costing because you need to find out the per unit cost, because then only you can add profits and actually go ahead and find out your selling price. But this absorption costing may not help us, may not be, will not be giving an answer to most of our questions like, if there is a scarcity, what do I do? If there's a scarcity, what do I do? If I do not have adequate material or labor available with me and I have to do production and I have to make up a call that I produce good A or I produce good B, then how do I take up a call? For example, a very simple example, right? Guys, right now, I'm not using any textbook. I'm talking to you, right? So please listen to me, right? Before I reach up to the topic, right? So I'm asking all of you a question. Now, I have to, let's say, take up CA Intermediate, I have to take up CA Foundation, and I have to take up CA Fund. I'm asking all of you a question. Now, I'm a human being, right? Out of 24 hours, I cannot keep on teaching for all 24 hours. So if I say from those 24 hours, I'm sleeping for 8 hours. Yes, I am doing my, regular course for 2 hours, right? I am attending to my management of, talking to students, telling them about CA and all that stuff, meetings. That takes away my 6 hours in a day, right? How many hours are left, guys? How many hours are left? 8 hours. Now, in this 8 hours also, I need a rest of around 2 hours. That means technically I have only 6 hours in a day to teach. I only have 6 hours in a day to teach. For my teaching, I'm left with only 6 hours. All this which I mentioned was unavoidable. I have to sleep for 8 hours. I have to do my regular course, which requires 2 hours. So those 10 hours are gone. 6 hours, I have to take up the meetings. Parents want to meet, students have a query, so many things, right? So those my 6 hours go away for that. And 2 hours, I need my me time. I need to do my yoga. I need to do my me time, right? I need to watch a movie or whatever. So technically, I'm left with 6 hours. Now, you people tell me, I'll wait for your answer. I have only 6 hours. And let's say the institute tells me, madam, you have got foundation, so you can take up, intermediate also you can take up, final also you can take up. Now, please tell me, what is it that you would like to teach? And now, how do I take up a part? Tell me. How do I take up a part? Tell me, any idea? A very good morning. Harish, Vivek, Tulisi, Namrata, Inderpal, Kushi, Shrishti. Namrata, how to manage study and articleship? See, when I entered CA, I am after grade 12, but at my time, the moment you give your CA foundation, you have to enter into articleship. So I was very young. I had just given my 12th, and after 12th, I had just given my CA foundation. And I cleared my foundation, and immediately after that, I was into articles. So I have done my CA along with my articleship. First of all, Namrata, we need to understand that those 6 to 8 hours which I'm spending in the office, it's a part of my process of learning. All of us have got into this habit of dividing that, okay, this is articleship, this is the time only I'm studying. No. The way you if you're an engineering student or a medical student, you tell me a medical student has to, from 8 o'clock in the morning till 12 o'clock, the student is in the hospital at the same time attending lectures. So they are doing both the things simultaneously. They are actually looking at the cadaver, cutting it, seeing it. They are being taught. They are being actually shown the things, and they are being given lectures also. Yeah. So that means studies and the on-the-job training, both the things are going together. And a doctor, after becoming a doctor, also has to still work for a few years. I do not know how many. And then only they get that, certification of they are fit to work as a doctor. I think after the 4th year, everybody has to at least work besides those 4 years when they were actually studying and actually doing the kata pita, and they were actually in the theater and taking care of the patients and everything. They were doing that. So in a medical profession, they take it up as a part that, okay, when I'm going in for medicine, I need to be on my toes from 6 o'clock in the morning till 1 o'clock in the night. And they're doing studies and work together. So why can't a CA student have that attitude? You have to be in the office from 10 o'clock in the morning till 6, 7 o'clock in the evening. And you have to manage your studies along with that. You have to get up in the morning and do your studies, or you come back from office, then you have to study for 2 to 3 hours. So that's the answer which I got from my boss, and that's the answer which I am giving to you. Right. Okay. Shrishti, that's not important. 2 classes a day. Foundation and intermediate. That's what Harsh says. Ma'am, teach only intermediate. You are badmash because you're doing intermediate, so you want me to teach intermediate. Okay, Vivek says, ma'am, 2 hours for each course. Okay, so Jay says, ma'am, you can just divide it. Foundation 2 lectures of 2.5 hours each, or inter 2 lectures of 2.5 hours each, or final 2 lectures of 3 hours each. Okay, so that's the answer which Jay says. Okay, Jay, I'm looking at, first of all, how have you people reached up to the thing that I should take up 2 lectures of foundation or inter, or I should take up 2 lectures of inter or final or whatever. See, we are always talking about commercials, yes or no? Yeah. So my method of thinking when I have to take up a call that whether I take up foundation or whether I take up inter or whether I take up final, don't you think should depend upon that what is it? See, the fixed costs, I don't have to incur any fixed costs. If I accept any lecture of ICAI, I'm not incurring any fixed costs. I have a laptop, I have an internet connection. I am teaching whether with ICAI or if I'm not teaching with ICAI, I have my setup, right? So I'm not incurring any fixed costs. So fixed costs should not be, first of all, my method of taking up a call that whether I should take up CA foundation or CA inter or CA final or whether I should teach whatever. I have the setup. So whether I decide to teach foundation or inter or final with ICAI, fixed costs, first of all, is not important. All of you agree with that or not? All of you agree with me or not? First of all, let's go step by step. Let's go step by step. Tell me. I have the setup. I have the laptops with me. I have the internet connection with me. I have the place. I have the chair. I have the table where I'll sit down and take up a class, right? So whether I take foundation or whether I take inter or whether I take final, these fixed costs are already incurred. Yes or no? Tell me. Tell me whether these costs are incurred or not. Jay, I did my articleship from Kanpur. I belong to Kanpur. Wonderful, Vindapal. Now answer my question. Are fixed costs relevant? First of all, tell me. Are fixed costs relevant? Whether I accept a lecture of C Institute or foundation or inter or final, is fixed cost relevant to me? This is the last time I'm asking. Then I'll see what you answer. Should I think of the fixed costs? Should I think of the fixed costs? Till the time you people are going to give me the answer, the answer is no. Absolutely correct. No, Saurabh. Fixed cost is not relevant to me. Yes. Madhili, you say, Ruchita, you say fixed cost is relevant. Yes. But are you agreeing with me? I do not know. Ajay, you're agreeing with me for that articleship thing? Okay, that's wonderful. You agree with me. I want you to answer me this question. So before you answer me, perfect. My fixed cost will not change. I don't have to buy another laptop if I'm teaching foundation, or I have to buy a higher quality level of laptop if I'm teaching inter or final. It's the same. Fixed costs, not relevant. What is, so that means when I am taking up a call, you should understand that fixed costs, considering them per unit, doesn't make sense. Per unit doesn't make sense. Right? But I should consider them in totality. That okay, this is the expenditure I'm doing. That's the way I should think. Okay, so all of you also agree? Wonderful. Everybody has answered this question. So that means you understand. Wonderful, Abhijit. Everybody, okay, is in the same page. That's it. So everybody is in the same page, right, Tulsi? So that means fixed cost per unit should not be relevant. That how many students I'm teaching, C Institute, there are 10 students who are attending my class or 100 students, irrelevant for me. One student attends my class or 1,000 students attend my class. I need a laptop. I've incurred. Internet connection has to be the same because the lecture has to, for delivering the lecture, I need to have a particular amount of internet connectivity. All that is paid. So fixed costs are not relevant, right? So number of students is not relevant for me. Whether I teach foundation, inter, final, not relevant for me. So that means fixed costs should always be considered in totality. Now, when I say totality, means when ICAI says that, okay, Anu ma'am, I'll be paying you X amount, I should be considering in total that, okay, am I being able to cover up my fixed costs? I should not go unit wise, right? Okay. So one thing, we are all on one page. But the second thing is the variable cost. Variable cost is always per unit. Now, variable cost per unit, if I teach for 1 hour, let's say if I teach for 1 hour, right? Now, for teaching for that 1 hour, I have to, in our service industry, we are spending our time, right? And that time has got value. Yes, the time has got a cost. How? Because if I would not have been teaching with ICAI, I will teach at some other place, right? So for example, if I teach at some other place and at that some other place, let's say I am going to receive, right, rupees, let's say 3,000 per hour. For example, I'm going to receive 3,000 rupees per hour. So that means my per hour cost is 3,000 that when I am going to teach. For we as faculties here, number of students is not relevant. What is relevant is per hour what I am going to earn. That's because that per hour is a variable cost which I am actually incurring. Right here, I'm comparing variable cost with respect to that if I would have worked somewhere else, I would have got this 3,000, right? Though this is an opportunity cost, but because in our service industry, where unlike a manufacturing industry, there is material, there is labor, there is variable expenses. In our case, it is not there, right? Okay, so I'm just taking up this expenditure. That means if I work for 1 hour, I want 3,000 rupees per hour to be paid to me, right? At least 3,000 rupees per hour to be paid to me. Now, for example, if ICAI pays me 2,000 per hour, if I take inter, if it pays me 1,500 per hour, if I take foundation, if it pays me 3,000 rupees per hour, if I take final. It's a very simple thing. I will not take up inter. I will not take up foundation. I will take up final only because according to me, if I would not have worked with ICAI, if I would have worked on my own or with somebody else, I would have got 3,000 rupees per hour. So that's my variable cost. That's my cost of giving 1 hour. Yes or no? So that cost of giving that 1 hour is 3,000. So simple decision. Okay, now I put it, or instead of teaching, I put it, if it's a manufacturing industry. For example, there are two products, A and B product, right? And A can be sold for 20 rupees. B can be sold for 15 rupees. Yes. If I manufacture A, I will be incurring variable cost 12 rupees per unit. But if I manufacture B, I'll be incurring 10 rupees per unit variable cost. Now that means the fixed cost I'm not considering. That means if I manufacture 1 unit of A, I'll be incurring 12 rupees and I'll be getting 20 rupees. That means what is, use the word contribution. I get a contribution of 8 rupees per unit that I produce. Are you getting my word? What did I say? If it's a manufacturing concern, I'm able to sell 1 unit of A at 20 rupees. Fixed cost I'm not considering. But the variable cost of producing, because variable cost is being incurred every time I produce 1 unit. If I produce 2 units, I'll be incurring 24 rupees, but then I'll be getting 40 rupees also. If I produce 3 units, I'll be getting 60 rupees, but I'll be incurring how much? 12 into 3, 36 rupees. That means each unit that I produce and sell, I will be earning 8 rupees. Now that this 8 rupees is not profit. Please understand, this 8 rupees is not profit. It is not profit. This 8 rupees is not profit. But I'm using the word that this is a contribution. Why do I use the word contribution? Because from this 8 rupees per unit I have sold, I'll multiply with the number of units I've sold. Then I'll get to know that, okay, how much contribution I've earned. And then I'll deduct all the total fixed cost. And then I'll come to know that, okay, how much profit I have. So that is why the word contribution is everybody clear. Now here, if you look at it, 1 unit of A gives me 8 rupees per unit contribution, but B gives me 5 rupees per unit contribution. So if I'm able to produce and sell 1,000 units of A, my total contribution will be 8,000. But if I'm able to produce and sell 1,000 units of B, my total contribution is going to be 5,000. If my total fixed cost is 4,000, very simple, profit here will be 4,000. 8,000 minus 4,000, but profit here would be 1,000. 5,000 minus 4,000. Now it becomes easier for me to take up a call that between A and me, if I have to decide which one to produce, I can do that. I know it is very simple. I will like to produce A because A gives me a higher profit. Anybody? Any problem? Have you understood what I'm trying to say? Thank you. Okay. Yes, Dorji. Good morning, ma'am. Could you please provide the notes for us for the lectures you have given till now? Dorji, they are already uploaded. They have been given. And we give you MCQs. We give you certain practice questions. Notes per se, when you say is about the concept which I'm teaching you. I can't write this and tell you, right? So that's it. So rest the questions, the theory questions, the extra practical questions, MCQ, everything Dorji has been uploaded till now with each topic that you are studying, right? Okay, now Deepthi, agree, yes ma'am, got it. Wonderful, Hari. So ma'am, whether contribution includes FC and profit? Logical, Hari. Logical. A contribution per unit. The word contribution came into existence because it's a contribution towards fixed costs. And after you recover fixed costs, it's a contribution towards profit. Yes, Hari. So can I use this line now that it is contribution because I need to have a contribution towards my fixed costs. Once my fixed costs are recovered, then it's a contribution towards my profit. Okay. So, yes, Vishaka, is everybody clear? Why do you want to do it, Surabhi, per unit? That's what I told you. In the beginning only, I made you only get convinced with me that doing fixed cost per unit has got no relevance. Then why do you want to do it per unit? See, we studied our journey for studying costing began with, if you'll actually put down your journey for studying costing, just try to put down your journey for studying costing. We studied costing with respect to why costing. Then we tried to understand the cost elements, material, labor, overheads. Then we tried to understand that, okay, how to record it. For that, we read the cost accounting systems, integrated, non-integrated. We talked about cost sheet. Then we understood that, okay, there are various methods by which a good or an object comes into existence. So we talked about unit costing, we talked about batch costing, we talked about job costing, we talked about contract costing, process costing, joint and byproduct costing, operation costing or service costing. So we understood that, okay, the good can come into existence one by one. So unit can come in a batch, so batch costing. It can be tailor-made, so job costing. It can be a long time, once in a blue moon kind of a thing, contract costing, service industry, operation costing. The good may come into existence after continuous process of one or two process costing. The goods may come into existence jointly with some other product, which can be a joint product or a byproduct. We studied all that. And now we are learning how to take up decisions. And for taking up decisions, we need to study marginal. As the name suggests, marginal. That means what is the marginal cost that you need to incur if you produce and sell a product? The marginal cost of producing and selling a product is nothing but the variable cost, because fixed costs have got nothing to do with production and sales. So I began my lecture with only talking about variable cost and fixed cost. Yes. So I can see, understood. Thank you so much. So that means all of us understand that why are we studying marginal costing? We are studying marginal costing because marginal costing says we should consider variable cost per unit and we should only take a fixed cost in totality. Right? Because if at all we need to take up decisions, we need to find out contribution per unit. So what is contribution per unit? Sales, or you can say selling price minus variable cost I get out with contribution. I'm writing it too because sales means total. So I get out with total contribution at one go. If I take up the total figures, you can start off with per unit, then you get out with contribution per unit, right? So I need to find out the contribution, right? Once we know the contribution, then amount of contribution that I get, which is sufficient enough to cover up all my fixed costs, I say, oh, that is a point, or that is the number of units at which I'm earning no profit because I am just able to recover all my costs. So that is also known as a break-even point. Break-even point. Why? A point at which you make no profit, no loss, right? And after all my fixed costs are recovered, I earn profit. So what will you call it? You'll say margin of safety. Why margin of safety? Because those units are the units which are saving your skin. They are the units at which you are, when you produce after the break-even units, the units which you are able to produce and sell, you are earning profit of. Now, all this we could never imagine till now, whatever studies we have done. We've always talked about bifurcating costs. We've always talked about finding out per unit cost. You studied joint costing. There also you were talking about that, okay, this is the joint cost. How do I divide it between units? Process costing, okay, after this process, this is the cost per unit. After this process, this is the cost per unit. So till now, your intention was only to find out per unit cost. Your intention was only to understand what is normal, what is abnormal. So till now, till marginal costing, you have only understood that how do you accumulate expenditures on the cost center and find out a per unit cost. Or you can say absorption costing, making up a cost sheet ultimately and finding out the cost per unit. But marginal costing is not about finding out cost per unit. Marginal costing is all about taking up a decision. It says that if your selling price, is rupees 10 and your variable cost per unit is rupees 6, they say you are getting a contribution of rupee 4 per unit. So it says if we sell 50,000 units, the total contribution that I'll get would be 50,000 into 4, which is 2 lakhs. If my total fixed cost is 1,50,000, then you know that you are earning a profit of 50,000. Now look at it. It is so easy. It is so easy. Back of the mind, we are very, very clear that, okay, if we are making and producing, selling 50,000 units, I will be earning a profit of 50,000. I could have done it like this also, that, okay, if my total fixed cost is 1,50,000 and I am getting a contribution per unit of 4 rupees, that means at what units I will be earning no profit, no loss. What you could have done? 1,50,000 divided by 4, you know that at 37,500 units, 37,500 units if you produce, you will not get a single rupee profit, right? So you know that after 37,500 units, every unit that you're going to produce and sell is going to give you a profit or a contribution of rupees 4 per unit. And that contribution per unit after 37,500 units is going to be nothing but a profit. That means at 37,500, my total contribution is how much? 37,500 into 4, which is 1,50,000. So profit is 0. Because from this 1,50,000, when I subtract my fixed cost of 1,50,000, my profit is 0. But after 37,500, if I sell 37,501 unit also, then that 1 unit, that 4 rupees which I get is profit. So now it becomes very easy for me. If I am selling 60,000 units, I know it beforehand that what is going to be my profit. 60,000 units minus 37,500 units. Whatever units I get into 4, I know is the profit I'll be earning. How many of you are clear with what I have taught till now? Brinda, I don't need to explain you this word contribution. This is a word which is being used, but I am explaining that why is the word contribution. So I think I just explained. If you have still not understood, please let me know. That why I can't call it profit, because profit you get only after you have deducted all costs. So we use the word contribution because variable cost is unavoidable. I need to deduct variable cost from my selling price. And once I do that, I come to know that, okay, this is the contribution which I get if I produce and sell 1 unit. So as many units I sell, I will be getting a contribution as per those many units. And if I get as much contribution that my total fixed costs stand to be recovered, I make no profit, no loss, because I have been able to cover up all my fixed costs. But after my fixed costs are recovered, whatever contribution I get is nothing but profit. Makes me feel so happy. Okay, if all of you are clear, do it for me. Say, for example, the selling price of my product is rupees 12. The variable cost of producing the product is 9. If my total fixed cost is 3 lakh, can you tell me, question 1, if I sell 1 lakh units, what profit do I get? Second question, if I sell 1,50,000 units, what profit do I get? what is the point? What is the number of units I need to sell? I need to sell that profit is 0. Tell me. Tell me. I've given you 3 questions. Tell me. I'm giving you 10 seconds. Please tell me. If I tell you if the selling price is 12, the variable cost is 9, total fixed cost is 3,60,000. I've given you 3 situations. Please tell me. You have the time. 10 seconds I'm giving you. Please tell me the answers. Okay. So, okay, I have started getting out with the answers. Wonderful. So they say, Vinod says, ma'am, there's going to be a loss of 60,000. Harsh says, ma'am, in first situation, it's a loss of 60,000. In second situation, he says there's a profit of 90,000. And he says, ma'am, 1,20,000 is the profit. I feel so happy. I already feel on top of the world. Okay. My selling price was 12. My variable cost was 9. So my contribution was 3 per unit. Yes. Situation 1. If I was selling 1 lakh units, then my total contribution was 1 lakh into 3 lakh. Now from this, if I subtract my total fixed costs of 3,60,000, I get out with a loss of 60,000. If I sell 1,50,000, my total contribution is 1,50,000 into 3, which is 4,50,000. So my profit will be 4,50,000 minus 3,60,000, which is 90,000. Yes. Situation 3, where no profit, no loss. That means if I want my profit should be 0. If I want my profit to be 0, that means I want my total contribution to be equivalent to my total fixed cost, yes or no? So I know my total fixed cost happens to be 3,60,000. And I know my contribution per unit is 3. So I know that at 1,20,000 units, there'll be no profit, no loss. Did I teach you any formula? Tell me. Wonderful. See, all of you have answered correctly. All of you have answered correctly. Aarti, Millie, Ria, everybody has answered correctly. See, Kushia, Reshma. I didn't teach you, but still you could get the answer. You know why? Because you're following the concept. You're being very logical. You say that, okay, if I'm producing and selling 1 lakh units and I'm able to get only 3 lakhs, my fixed cost is 3,60,000, then where will I get profit? I end up suffering a loss of 60,000. If I produce 1,50,000 units, I know that per unit I'm getting 3 rupees only. 4,50,000 I get. So 3,60,000 fixed cost if I remove, I know I end up getting a profit of 90,000. And if somebody says that, no, we don't want any profit, you tell me a point where there'll be no profit. Okay, you say if the profit is going to be 0, you say that means, madam, it is very simple. That means I should get enough contribution which is equivalent to my fixed cost. Here you are. So if I say that what was the break-even point, that is a point of no profit, no loss, you will say, ma'am, that 1,20,000 units was the point of no profit, no loss. If I say what is margin of safety, margin of safety means a point where you earn profits. So you will say that, ma'am, 1,50,000 units when you were selling minus 1,20,000 units, because they are the break-even units. 30,000 units were your margin of safety, because at those units you were earning profit. Wonderful, Moksh. Wonderful, Namrata. Wonderful, each one of you. I have not done anything right in the morning. We are just having a cool talk today, right? We're just talking about certain things. Yeah. And see, what's the result of our talking? We have understood that what this marginal costing can do. It's like a magic wand in the hands of a chartered accountant. People say it's a topic. Trust me, I fell in love with the CA profession because I think this, after entering into CA, for the first time, I actually understand why I need to study. Because in school time, I used to enjoy reading history, but people were marked. You know, if you enjoy reading history or you enjoy literature, they were like, oh, Rattu Tata. Oh, she enjoys reading history. So in order to be not to be slated as a Rattu Tota, I would not like to study history. I would prefer studying, physics or mathematics or chemistry, because if you study those subjects, you are able to solve numbers, you are considered intelligent. But I used to like reading history. I used to like reading about that, okay, what is this fort, how it is built up, who built it. Yeah, I was not interested in remembering the names. I was not interested in remembering the names. But I was definitely interested, okay, this is how our country used to be when I was born, before I was born. I was fascinated by the dresses which were printed in the notebooks and textbooks. And guys, all of us love reading. Don't you think so? All of us are reading so many books now. I had been reading all throughout my life. And you come to know there is so much to read. So history is not a subject, but it is a matter of interest. You can just keep on reading. So till grade 10th, a lot of us don't enjoy our studies because we don't know why are we studying it. Because end of the day, the result is, if I'm being asked that, okay, who was born on such and such date? Arre Baba, I remember my birthday. I don't need to remember the birthday of every XYZ person. So we used to be bored that, okay, I don't need to remember all this. Geography was interesting, but since we had not visited a lot of places, we didn't understand, okay, 4 degrees change, okay, GMT line, okay, this is how the time will change. But now once we are grown up, we understand that, okay, ये country हमसे पीछे, अच्छा ये country हमसे आगे, अच्छा इतना difference होगा तो इतने hours का difference होगा, because जिस तरीके से the earth will move, according to that, each country cannot have the sunrise and the sunset at the same time. If Australia is in the southern hemisphere and I am lying in the northern hemisphere, then in that situation, if morning is at 6 a.m., if it will be morning at my place, it should be evening as far as Australia is concerned, because by the time Earth is on, the movement is, I'm not teaching you geography, but I'm trying to tell you, the concept is logics. That time we didn't understand, but today we understand what is the importance of it, yes or no. Similarly, cost accountancy, people say it's a tough subject. I say it's the sweetest subject, because you don't have to memorize any format. You don't have to mug up any theory. You don't have to remember that, okay, this is the law or this is the act. It is just asking for common sense. It is just expecting some kind of common sense from you. That, okay, till now, whatever we have studied, there are two kinds of costs, variable and fixed. Fixed costs, we all understood. that when I decide on certain things, these fixed costs are period costs. They have got nothing to do with the units being produced. Today, I take up a lecture with you or I don't take up a lecture with you. I still need to have this internet connection. I need to buy my laptops because that's a prime requirement, yes or no, in order to start in this pandemic. Yes or no? If it was not pandemic, it's offline, then I need to have a place where so all those expenditures, definitely they are important. I have to incur those expenditures, but those costs are period costs. Since they are period costs, they are fixed costs, there is no point considering them per unit. I should consider them in totality. This is what marginal costing tells me. But it says that, of course, variable costs are very, very relevant because every time you produce and sell, you have to incur, because for producing and selling, you need to incur a variable cost. So if you incur 6 rupees per unit for producing and selling a product, and you are able to sell that product for 10 rupees, you are bringing home 4 rupees. Now, how many 4 rupees, how many units I need to sell so that all this period costs, this fixed costs of mine gets recovered? So if somebody says, Anu, your total fixed cost for the whole year is 4 lakhs. Now, beforehand only I know that I need to produce and sell 1 lakh units. Because at 1 lakh units, I will get enough contribution that I am able to recover all my fixed costs. Now, if I know that the market is bad and I will not be able to sell more than 90,000 units, I will not be an idiot to enter into that market. You tell me. I know that I will get a contribution of only 4 rupees per unit. I need to sell 1 lakh units in order to recover only my fixed costs. And the market demand of that product is not going to be more than 90,000. I will never enter into that market. This is what marginal costing does to us. It helps us to take up a decision. So for studying marginal costing, you need to keep your eyes, ears open. That's it. Your common sense alive. That's it. And see, all of you answered all questions correctly. Now, if I know that, okay, the product in which I plan to produce or I plan to enter into, the contribution is going to be 4 rupees per unit and my fixed costs a year are going to be 4 lakh. And I can sell as many as 4 lakh units. I would definitely like to get into that business, yes or no? Because I know that the moment I am able to produce and sell 1 lakh units, after that, whatever units I produce and sell, the contribution per unit is only going to be profit. Yes? Okay. So, Ria, I just did it again. Thank you, Sunil. Right. It's crystal clear. Thank you. Wonderful. Right. Okay, Kushi, you love my examples. Thank you so much, Kushi. I am a student just like you. I was a student just like you. Very inquisitive, very lazy. Right. How a normal student is. Right. A normal student wants to know the thing, but he's a little lazy. And at the end moment, and yes, we want everything in our lives. We want to party also, we want to sleep also, we want to do everything also. And at the same time, we want to pass also. And if somebody gives us very big examples, we are not able to connect with it. And when we are not able to connect with it, we don't understand it. And when we don't understand it, the end result is we don't pass. So, bacha, whether you're doing costing or any other subject, make it a point that you understand it in your way. I really hate it when students are running after, even after my repetitive telling you that guys, read the institute material for any kind of theory. That is the notes which is there. Try to understand a concept, try to solve more questions. But still, when students are running after notes, what do you think notes, whether it is a law paper or a tax paper, will fetch you? I ask all of you on this question. A tax paper, what will notes help you? If at all you want to understand that, okay, in the salary, it's not notes, it's actually a summarization. Now, summarization, anyways, ICAI has done it for you. Every chapter end, there is a summarization. What more summarization you need? There cannot be anybody who's going to give you some kind of a tablet and say that, okay, the moment you have this tablet, you're studying taxation, you need to understand that, okay, it is residential status, how do you calculate? When you become a non-resident, when you become an ordinary resident. Okay, if you're an ordinary resident, how do you tax? Your global income is going to be taxed. How do you calculate income? What is it that we do? You need to go step by step. You need to understand. You need to read. You need to go ahead like that. Okay, so now if I try to put it like this now, that means selling price minus variable cost is equal to contribution per unit. And if I say break even point, if I want to find out in unit terms, it'll be total fixed cost divided by contribution per unit. If I say margin of safety is going to be nothing but total sales minus break-even point sales, or we can say profit divided by contribution per unit will give me MOS in unit terms. These are all formulas, but can't you derive these formulas on your own? Yes, you can. Yes. Now, if I do not have per unit figures, then can I find out break even in rupee terms? Or we can say, if I do not have contribution per unit, can I find out contribution divided by sales into 100 and get a figure in the form of percentage? For example, if somebody gives me sales is 1 lakh, total variable cost is 70,000, then total contribution is 30,000. That means contribution divided by sales is how much? 30,000 divided by 1 lakh into 100, which is 30%. Yes or no? That means contribution instead of per unit, I can also find out as a percentage, and that percentage would be known as contribution to sales ratio, or some people prefer calling it as profit volume ratio, PVR. Why profit volume ratio? Logical. Higher the percentage of contribution, earlier you will break even. Yes or no? Higher the percentage of contribution. If my contribution percentage is 30%, on the other hand, there's another product on which my contribution percentage is 50%. Where am I going to break even faster if the fixed costs are same? Definitely where my percentage of contribution is 50%, that is higher. That is why higher the contribution ratio, earlier you will be able to earn profits, or earlier you will be able to break even. Right? So if I want to find out break even point in rupee terms, I can do total fixed cost divided by PVR. Yes, sir. Now this is the list of formulas you can actually say. So PVR, or profit volume ratio, is nothing but contribution divided by sales into 100. So if you are wanting to find out break even in rupee terms, there are two methods. One is you find out break even units and multiply it by the selling price. Yes or no? You can get out with break even in rupee terms. Or you can do what? Total fixed costs divided by PVR. Of course, you'll have to multiply it by 100 because it is in percentage. You will directly get break even in rupee terms. Am I good? Am I clear? So let me see. Fixed costs are the costs which the fixed costs and don't have the reaction. Absolutely clear. Thank you, Rohit, Namrata, ma'am, you're awesome. Oh, thank you so much. Uh, thank you, Namrata. Makes me feel so happy right in the morning. Pooja, both groups or one group? The advantage of giving both groups is the benefit of a set-off. But if you are not very sure that you can manage 8 papers together, please write one group. Right? There is no rush in our lives. We people have a habit of rushing. At the end of the day, we spoil things. If you are prepared, if you have studied well, you are able to manage 8 papers. This only you can know, not me. Going for 2 groups. But if you're not well prepared, you will not be able to manage 8 papers together, either of the 2 situations. Write one group. Personal level pay, I always tell a student, try writing both the groups together in the first attempt. In that, try to give in 100% to one group and maybe lesser efforts in the second group. But by writing the examination, you'll be very clear as to how paper comes, what is expected out of you. If you pass, because of the set-off advantage, wonderful. But if you do not pass, at least in the second time, you know that, okay, what is it that you need to study and how you need to study. Choice is yours. Ma'am, always I get scared in paper of costing. Please, Kushal, think about me. You'll stop getting afraid. We are not afraid of the paper, Kushal. Always remember that. We are always afraid of an unknown uncertainty. Right? Like abhi Omicron karke virus which has come up, they're saying this is new virus which has come. Now nobody knows what is this virus, right? Nobody knows what is going to happen. But all of us are afraid because when we go back and we start looking at the last year and we start looking at this, what happened in May and June when the second wave was there in our country, we lost so many of our loved ones. We are afraid. Though it is coming up that this Omicron virus, whatever that name, Omicron or whatever that virus is, can be cured at home and, it is not very fatal. But still we are afraid. We are wearing masks, we are going down, all intelligent and educated people. I'm not talking about people who believe COVID is gone, whatever. But we are all afraid. So we are not afraid of COVID per se. All of us understand COVID is a virus. So many viruses have already come since the time I'm born, and I'm like, already going to be like in next 47 years of my age. I've always seen so many things coming up. SARS aa gaya, measles aa gaya, everything is coming. Medicine hai, we're taking it up. It's like a flu, it's like a virus. But we are afraid of the consequences. Oh, COVID is coming, people are dying. Oh, it affects the lungs. Oh, it happens like this. So we are afraid that what if it comes to us and we succumb to it. On the other hand, my way of thinking is instead of thinking what the consequences are, why can't we just take precautions? If the doctor says take a precaution, sanitize your hand. If you have touched a surface, sanitize your hands, wear a mask. If you are in public, exercise, eat well. So instead of thinking of consequences, what is going to happen if COVID happens, why don't we take up a precautionary measure and do everything in the best manner which has been advised? If we do that, trust me, even if COVID comes in, we'll be able to fight it out because ultimately it's a virus, and if we have a good immunity system, you're going to fight it out. Same situation goes in for CA examination. We are afraid of all those things which we have behind us. When people say CA is tough, CA is tough, CA is tough, people have drilled into our minds CA is tough. If CA was so tough, how come an ordinary student like me clears CA in first attempt? CA is only looking out for people with common sense. CA is looking out for people with commitment. If you are low on commitment, if you are low on your common sense level, you don't want to apply it, you want to just mug up and puke it out, I'm sorry. So don't be afraid. Kushal, don't be afraid. You are afraid of the consequences that if I'm going to fail. Stop thinking that what will happen if you're going to fail. If you're going to fail, it's okay. But the question is, judge yourself. Did I give my 100%? Did I study the subjects in the fashion and in the manner which was required? And if no, then you should not have any grudges. But if yes, then you can actually look back and see if at all you are unsuccessful, then why this thing happened. But trust me, if you have studied things in the right fashion, in the right manner, the concepts are clear, you have done the MTP of past 2 attempts, you have studied the subject, you will not fail. You are running after 100 books. Let me read this book. Let me read this author. Let me read this author. Let me do this. Let me do this. This person says this. This person says this. You do this. You are so confused. So then confusion can reach up to confusion says. Okay, so this is it. Crystal clear. I don't get BP in rupees. BP in rupees. Okay, you didn't get it. Okay. Let us say the selling price is rupee 10. Let us say variable cost is rupee 6. So what is contribution? It is 4. So if my total fixed cost, let us say, is 4 lakhs. Now, if you want to find out break even in unit terms, what will you do? Who asked me this question? Ria. What will you do? Total fixed cost divided by contribution per unit, which is 4 lakhs divided by 4. 1 lakh units. Yes? So if you want to find out break-even point in rupee terms, this is unit terms. What will you do? 1 lakh into 10 rupees. You'll say, ma'am, at 10 lakh rupees of sales, if I do sales of 10 lakh rupees, I will be able to break even. Because at 10 lakh rupees of sales, 6 lakh rupees will be my variable cost. So I'll be left with a contribution of 4 lakh. And that 4 lakh will take care of my fixed cost. That means I will be having no profit, no loss. That means at 10 lakh rupees of sales, I will have no profit, no loss. So this is in rupees, and in units, it is 1 lakh units. I could have done the other way around. I could have found out my contribution sales ratio, which is 4 divided by 10 into 100, which is 40%, yes or no? And I could have directly found out my break even in rupee terms. How? Fixed cost is 4 lakhs. Divided by 40%. You will get out with 10 lakh rupees directly here. Yes. So I think till now everybody has understood. Okay, has understood. Sunil, I told you the benefit of giving both groups is a set off. If you've got in one group, you've got 190, and in one group, you've got 210. Those 10 marks will be transferred to the first group, and your total will be 400. You will pass. Granted, you've got 40 marks in each paper. That's the advantage. All clear? Wonderful. So now, why do you want to know my birthday, dear? It's already gone. It was in November. Okay, so now, guys, let's take up a short break. It is 8:18 in my watch. So let's meet at 8:28. Yeah? Okay. So Okay, so we are back again after a short break. And all my lovely students have actually understood this concept of marginal costing. So till now, if we summarize what all we have studied, then you will say that we have understood the concept of contribution per unit. Contribution per unit is, of course, selling price minus variable cost per unit. We have understood the concept of profit volume ratio or contribution is to sales ratio. It is nothing but contribution divided by sales into 100. We have understood the concept of break-even point. We can calculate in unit terms, or we can do it in rupee terms, or you can say currency terms. For unit terms, total fixed cost divided by contribution per unit. Or for rupee terms, you can do it in two ways. You can have break-even point units multiplied by selling price, or you can have total fixed cost divided by PVR ratio. Break-even point is a point where profit is 0. That's the point of break-even point. Or you can say total contribution is equivalent to total fixed cost. Yes or no? Yeah? All of you take 10 seconds, quickly write this. So fixed break-even point is a point where profit is 0, or you can say total contribution is equivalent to total fixed cost. We can find out break-even in unit terms, or we can find out break-even in rupee terms. We wrote this, right? So I hope everybody has written it. I'll wait for 10 seconds. Okay. Okay. Now, yes, Chair, there is an election on 3rd and 4th of ICAI. Election means region-wise, we elect our representative people who are going to run the institute, and we elect at the central level who will be at the helm of affairs of the CA Institute and will be representing the whole CA community and running the CA Institute, right? So that's the election. In order to run a body, you need some good people to run the organization. CA Institute has been running so well till now. It is all because of these elected members. So yes, there's an election on 3rd and 4th of ICAI. 3rd and 4th December. Okay. So are we good? Has everybody copied? Now, guys, once we have understood this particular aspect, I would like to share the institute material with you so that, you are able to appreciate that what all we have done. They have talked about what is marginal cost. So it is the incremental cost of producing. So it is basically the incremental cost of producing is nothing but the variable cost. So for example, they give you the total cost of producing 10 and 11 units is 10,000 and 10,500. Then the marginal cost of producing that one additional unit is rupees 500. They have tried to give you an example. Arnav produces 10,000 units of product Z by incurring a total cost of 3,50,000. This 3,50,000, they have given us a breakup. Material cost is 1 lakh, employee cost is 80,000, variable overhead is 20,000, and fixed overhead is 1,50,000. Now look at it. This can be directly written as work per unit, yes or no? But as far as fixed overhead is concerned, they have written up to a volume of 50,000. That means whether I produce 0 units, I produce 10,000 units, I produce 20,000 units, I produce 50,000 units, my fixed cost will remain 1,50,000. The moment it is more than 50,000 units, you'll end up spending fixed costs again, right? And the marginal cost of producing a good would be 10 rupees of material, 8 rupees of labor, and 2 rupees of variable overhead. That means 20 rupees is the variable cost or the marginal cost of producing a unit, right? So this is what they have tried to show a table to you and shown to you that whether you produce 10,000 or 10,001 unit, fixed cost remains same. So there is no effect. But if from 10,000 to 10,001 units, if you produce, these are the additional expenditures which is incurred. So technically speaking, all the variable cost per unit is the marginal cost of producing. So this is something beautifully which ICAI has done. Then Institute is trying to tell you that direct costing and marginal costing is used synonymously. We keep on using them, these terms interchangeably, but they're not the same, right? Okay, they say that relation of cost with respect to activity level must be understood. जो खर्चे directly relate करते हैं to a particular production level or batch level, we say that these are direct costs, right? For example, Arnav produces 10,000 units by incurring so-and-so expenditure. They have given us a breakup. And then they have said machine setup cost, 1,200 for a production run. 100 units can be manufactured in a run. Now here, this machine setup is a direct cost relating to the setup. Now look at it, how they are analyzing. They are saying material is a direct cost per unit because every unit I produce, I need to spend that 10. Similarly, employee cost is also per unit. Variable cost is also direct cost per unit. But machine setup cost is not per unit, but it is per batch, right? Depreciation is as per a level, that is, till a particular level, the depreciation is going to be the same. Fixed costs are also department-wise direct costs. So they are trying to tell us there's a difference between direct cost and marginal cost. We are doing marginal costing. We are not doing direct costing. I hope we are very clear. Beautifully, Institute has tried to tell you. Direct costing is when you associate the cost with the thing with which it is being directly associated to. Like material cost is associated to the unit produced. Labor is associated to the unit produced. But setup cost in this case was dependent on the number of setups. So it's a direct cost per batch or per setup. Depreciation is a direct cost for a particular production level. And fixed costs are fixed cost is the wrong word. Direct cost as per a particular department, that okay, if I am incurring till that particular level, my fixed costs are going to remain 1,50,000. So I hope everybody is clear with this term. Let me look at any doubts. Ma'am, are you participating in the election? No, dear. I am participating by voting. I don't stand for elections. Everybody is not good for everything. Okay. Sunil is writing contribution is equal to sales minus variable cost. PVR is equal to contribution divided by sales into 100. BP in units terms is TVC divided by contribution. BP in rupee terms is total fixed cost divided by PVR into 100. Wonderful. Okay. Now, the thing is, Sunil, this setup cost, is it changing with every unit that you are producing? Tell me. I'm not talking about marginal costing. It is direct costing. Direct costing means the cost variates or it is directly related to a particular item. It can be relating to units, it may be relating to department, it may be relating to production level, it may be relating to a batch. So you tell me. Material cost changes with every unit produced. So that means it's a direct cost per unit. Similarly, labor cost changes with every unit that you produce. That means that's also a direct cost per unit. Same goes in for variable. But machine setup cost, does it change with every unit that you produce? Tell me. Machine cost changes with every unit that you produce? Okay, Vivek. Ma'am, after particular limit or level of activity, fixed cost can be changed, even if it is of fixed nature. Vivek, it is something like this. If I have a classroom which has a capacity of 100 students, So rent of one classroom would be there if there are 100 students. But if it is more than 100 students, I can't make them sit in that class. No, I'll have to take another class. So if I take up another class, then of course my fixed costs will increase. If I was paying 10,000 rupees per month as rental for one class, I'll have to pay 20,000 now. But my capacity is now not 100 students, it is 200 students. So it is a fixed cost. The cost is fixed because I have to pay it whether I have a student or I don't have a student. The rent is for a period. That is why it is fixed. And second, it has got nothing to do with production capacity, whether I teach one student or I teach 100 students. I still end up paying the same amount of rental. Kanishk ma'am's setup will remain constant. See? So if it is remaining constant, that means it is not a direct cost per unit. It's a direct cost for 100 units, and that 100 units is a batch. So it's a direct cost per batch, right? Okay, so everybody's clear? So direct costing and marginal costing should not be confused. Marginal costing is variable cost per unit, and direct cost is saying that which cost is directly related to what. Okay, and we are not studying direct cost. Differential and incremental costing, you will understand more of it when you reach up, say, final. Here it is only on a theoretical level. The difference between two costs, two production levels if you take up, and whatever is the differences, whether more or less, that's another differential cost. And as the name suggests, incremental. Incremental will only be, I'll only take up the increase. Differential can be increase or decrease, but incremental can only be increase. So anyway, so there's a thin line of difference between the two. Then they're talking about what is the characteristic of marginal costing, what are the facts about marginal costing. It is not a method of costing. It is actually a method of decision making. I don't ascertain any cost by marginal costing. I am not ascertaining cost. It is not a methodology to find out any cost. It is not a distinct method. It is a method to take up a decision that, okay, if I want to take up a decision, I'm in a bad situation, I should do pricing dependent upon my marginal cost. So it is not a method of finding out per unit cost, but it is a method for taking up a decision that how and what I should do. Okay, this is what they tell you. Then they talk about a marginal costing sheet, which I will be taking up in the next class. Marginal costing sheet, I'll be telling you the difference between absorption and marginal, then I'll be taking up, right? Then Institute discusses about contribution and sales revenue. Look at it, variable cost is 50,000, fixed cost is 20,000, selling price is 80,000. So contribution will be what? 80 minus 50, 30,000. Profit will be what? Contribution minus fixed cost. Then they talk about absorption costing, right? Absorption costing is something which we have studied, right? Under absorption of overheads, over absorption of overheads. Because in absorption costing, you are absorbing overheads on the basis of your normal capacity and trying to find out per unit cost. Yes? Okay. Okay. Okay, Ria. How many runs would be there? Tell me. It will be 10,000 units divided by 100 units. So there are going to be 100 runs. That means at each run, you're going to incur 1,200. So what is going to be your setup cost? 1,200 into 100, 1,20,000. Yes or no? 100 runs, 1,200. Yes or no? So 1,20,000. But if you're going to produce 10,001 units, you have to do one more run, no? Because the expenditure is per run. It is not per unit. Yes. That means the number of runs will become 101. 101 into 20 is how much? 1,21,200. I hope I'm clear, Ria. Okay. Now. Okay. So. Now, before we do that, before we talk about, so they've talked about, important CVP analysis, they've talked about absorption costing. This theory you may read, they've talked about marginal costing equation, selling price minus variable cost is equal to contribution. Or you can say contribution is equal to fixed cost plus profit, whatever. Right? Okay. And they have given us certain things. They have talked about break-even analysis, which we do. They have said we can find out break-even in an algebraic form or in a graphical form. Algebraic form means in the form of a equation, right? So look at it this week. Understood. ABC manufactures a single product incurring variable cost of 300 per unit and fixed cost of 2 lakh. If the product sells for 500, what is the break-even point? I think now all of us can do it orally. 500 minus 300, the contribution is 200. Break-even point would be 2 lakh divided by 200,000 units. Now, what is cash break-even point? Cash break-even point is from the fixed cost, if we do away with our non-cash item like depreciation. Now, depreciation is a non-cash item, right? So if my total fixed cost, for example, in the above was 2 lakhs, and if depreciation was 50,000, that means my cash fixed cost will be how much? 2 lakh minus 50,000, 1,50,000. Yes, sir. Then my cash break-even point would have been how much? 1,50,000 divided by 200. That will be my cash break-even point. So they give you a question. MNP has sold 2,75,000 units of a product at 37 rupees 50 paisa. Variable costs are 17 rupees 50 paisa. Yes. So, what is your contribution? Selling price is 37 rupees 50 paisa. Variable cost is 17 rupees 50 paisa. So, your contribution is 20 per unit. From that, they're giving you a bifurcation that manufacturing is 14 and selling is 3.5. Fixed costs are incurred uniformly throughout the year, amounting to 35 lakhs, including depreciation of 15 lakhs. Now, what is your normal break-even point? Your normal break-even point in unit terms will be 35 lakhs divided by 20, yes or no? But if you're asking me cash break-even point, it'll be 35 lakhs and I'll subtract 15 lakhs because that's depreciation. Depreciation is a non-cash item. So my cash fixed cost will be how much? 20 lakhs divided by contribution. So this will give you your normal break-even point and this will give you your cash break-even point. Am I good? Okay. So let's look at it. That's what they did. Then they said multi-product break-even point. Now, multi-product break-even point, what does that mean? Multi-product break-even point. Now, they say Arnav sells 2 products, J and K. Sale mix is 4 of J and 3 of K. That means every time I produce, I don't get only J. I get out with 4 units of J and I get out with 3 units of K. So what is the ratio between them? 4:3. Then they say the contribution is for J it is 40 and for K it is 20. Now fixed cost is 6,16,000 per month. Now guys, if I have to find out a break-even point, what do I divide it with? Should I divide it by 40? It will be wrong because it's not only J. Can I divide it by 20? No, because it's not only K. Now, both of them are coming in a ratio of 4:3, yes or no? That means if I want to find out a combined contribution, what should I do? 40 into 4 of J plus 20 into 3 of K, yes or no? Which is 120 plus 60, which is 180, yes or no? Divided by how many units? 4 of J and 3 of K, 7. Once we do that, I get out with a combined contribution. How much is it? It is some 25.714. My fixed cost was 6,16,000. So my break-even point will be how much? 6,16,000 divided by 25.7. Yes or no? I think I've done a wrong calculation. 40 into 4 is 160. 20 into 3 is 60. So it is 220 divided by 7. 4 units of J and 3 units of K. So it is 31.4. So my break even would be 6,16,000 divided by 31.42. How much is it? 6,16,000 divided by 31.42. It comes 19,605. So I make it 19,660. This is a combined break even, but then I'll have to divide this between J and K. Can I do it? So 19,606 divided by 7 into 4. That means, how did I do it? 19,606 divided by 7 into 4 would be of J. And 19,606 divided by 7 into 3 will be of K. Yes or no? Yes? Yes? Anything big about it? You're just combining it and finding it out. So, let's see how ICAI has done it. They say, they've done the same thing. 40 into 4 by 7 plus 20 into 3 by 7 comes out to be 31.43. They say they have rounded it off. It was 19,606. They rounded it off to 19,600 and then they just divided it between J and K. Yes? Can all of you do illustration 2 for me? Can all of you do illustration 2 for me? Okay. Let us all do illustration 2. They say we are supposed to calculate a break-even point and we need to find out sales to earn a profit of 20,000. They have given us some information. Fixed cost is 1,50,000, variable cost is 15, and selling price is 30. So first is, can I find out my contribution? Contribution would be Yes. So can I find out my break-even point? Costs. $1,50,000 divided by 15. Yes or no? 10,000 units. Any problem till here? 1,50,000 divided by 10. Right? divided by 15 gives you 10,000 units. This is your break-even point. Now they say, you tell me that if I want a profit of 20,000, that means if we desire to have a profit of 20,000, what is the total contribution I expect? I expect a total contribution of 1,50,000, which is my fixed cost, definitely. And I should add the desired profit to it, which is 20,000. So 1,70,000, yes or no? And if I divide this with my contribution per unit, I should get out with my units 11,333. Yes, any problem? You know that at break even, no profit, no loss, right? So at break even, my profit is 0. That means at break even point, your contribution is equal to your fixed cost. So if you desire to have some amount of profit, you need to add it up in order to get how much contribution you expect. Yes. So that's what I did. That if I desire to have a profit of 20,000, that means I desire to have a contribution of how much? 150 plus 20, 1,70,000. And I know what is the contribution per unit, which is 15. So I get out with how many units I should sell so that I get a profit of 20,000. Okay. You want to check it out? You can do that. 11,333 units. What is the contribution I get? 15. Yes. So 11,3. There is going to be a difference because it's in points. Into 15 is 169,999.9, or you can say 1,07,000. So from that, if you subtract the fixed cost, get out with a profit of 20,000. So is it clear? Is the formula very, very clear to each one of you? Wonderful. So can we do illustration 3, right? Here they solved it in terms of money. So what did they do? 1,50,000 plus 20 divided by 15 into 30. Why did they do? Because PVR ratio is 15 divided by 13 to 100, which is nothing but 50%. Right? You would have done that. Yes or no? A company has a PV ratio of 40%. Compute by what percentage must sales be increased to offset 20% reduction in selling price. Look at it. Company has a PV ratio of 40%. That means if selling price was 10, the variable cost should have been 6. That means the contribution should have been 4. That is why PV ratio is 40%. Now they say by what percentage sales must be increased to offset 20% reduction in selling price, right? Now, if I had to do it, you know how I will do it? I'll say, for example, if my selling price was 10 and my variable cost was 6, my contribution was 4. That is why my PVR was 40%, yes or no? I don't need to tell you how this is 40%. Now you tell me, if they say selling price reduces by 20%, that means the selling price from 10, it will reduce by 20%. That means it will become 8. If it becomes 8, variable cost won't change, but my contribution will become 2 now. If my contribution will become 2, right? That means my PVR, if earlier was 40%, my PVR now is how much? 2 divided by 8 into 100 is how much? It is how much? 25%, yes or no? So PVR, if it has fallen from 40 to 25%, and you have to see to it that whatever profit or fixed break even was there earlier, you should continue doing that, because they're saying, no, how much you should do so that you offset it. So what should you do? How much times you need to increase the sales? You tell me. What is the percentage? What do you think should be there? How should we calculate? Simple. If earlier PVR was 40 and now it is 25, so what is the percentage between the two? Ratio. It is 1.6, yes or no? 40 divided by 25. That means I will have to have 0.6 times sales more in order to achieve the same what I was getting. That means you can say 60%. It is nothing but calculation in percentage terms. Yes or no? So this is what exactly ICAI is doing. This is not costing, but this is maths. This is say if desired contribution was 40 and now revised contribution is going to be 25. That means now the sales value should be 1.6 times. That means you should change it 60% more, the selling price should be there. And then they are trying to prove it. Yes. Okay. And they have illustration 4. Right? Okay. Thank you. All clear? All understood? Thank you, Ria. Okay. Wonderful. Illustration 4. Let's do it. PQR has furnished the following data for the past 2 years. 2019, it was 8 lakhs. 2020, don't tell me. PVR ratio, they tell me that in 19 it was 50%, but in 2020, it is 37.5. Margin of safety as a percentage of total sales is 40%. In 2020 also, I know it is 21.875%. But I do not know the sales of 2020. They've said there has been substantial savings in the fixed cost in the year 2020 due to restructuring process. The company could maintain its sales quantity level of 2019 in 20 by reducing the selling price. So they are telling us the reasons. They are saying that we are able to maintain our quantity level by reducing the selling price, right? Now they are wanting us that what is the sales for the year 2020? Yes or no? Okay. So what is the information which is given to me, right? As per the information which is given to me, if PVR ratio is 50%, that means variable cost to sales will be 100 minus PVR ratio. Yes or no? Because sales minus variable cost is equal to contribution. So if PVR ratio is given to me, 100 minus PVR, I'll get out with variable cost to sales. Yes or no? That means it is 50%. Yes or no? Yes. That means in 2019, my variable costs were how much? 8 lakhs into 50%. Now this 8 lakh into 50% is a variable cost ratio. So I have calculated 4 lakhs. Yes. Okay. Then further they are telling me that margin of safety as a percentage of total sales is 40%. Yes. So margin of safety sales as a percentage of total sales is how much? 8 lakh ka 40% is how much? 3 lakh 20. This is your MOS sales. Yes. Now guys, at MOS sales, there are no fixed costs. At MOS sales, if I deduct the variable cost, the contribution which I'll get will be nothing but profit. Yes or no? Will be nothing but profit. And if I know that the variable cost percentage is 50%, that means at MOS also, 50% of this is how much? 1,60,000. That means my contribution will be how much? It is going to be 1,60,000. Okay. Now, why am I doing all this? I do not know. I'm just trying to calculate. I'm just trying to reach up to some situation. What situation I'm trying to reach? Now, if I know my profit element, can't I find out my fixed costs? See, if I know my fixed costs, things will become very easy because fixed costs don't change. Variable cost unit-wise don't change. Percentage-wise they will change. But unit-wise they will not change. But I can't find out unit-wise because I don't have units. I have information in total. So by doing all this, I have actually found out my figure of profit. How did I find out my figure of profit? MOS sales is how much? MOS sales is 40% of 8 lakhs, which is how much? 3,20,000. Please check on the calculation thing if I'm doing it correctly. 8 lakh into 40%. 3,20,000. Variable cost ratio, how did you find out? 100 minus PV ratio would be nothing but VC ratio, yes or no? So if PV ratio is 50%, VC ratio would also be 50%, yes or no? That means if I subtract the variable cost as a percentage to sales, I get out with contribution, yes or no? Which is how much? 1,60,000. Now at MOS, contribution is nothing but profit. At MOS, contribution is nothing but profit, yes or no? Yes. So guys, now you know that if sales is 8 lakhs, total variable cost is 4 lakh, total contribution is 4 lakhs, and if profit happens to be 1,60,000, then automatically this is going to be the total fixed cost, yes or no? 4 lakh minus 1,60,000, 2,40,000, yes or no? You want me to take up the whiteboard? I'll do that. Guys, total sales have been given to me as 8 lakhs. Variable cost percentage is 50%. So 4 lakhs. So my total contribution is 4 lakhs. Yes. Now MOS sales were how much? 40% of total sales, which is 3,20,000. From here, if I'm going to subtract the variable cost, which is 50% of sales, which is a normal thing, because I know the percentage, that means this is the contribution. Now, contribution or profit. At margin of safety, contribution is nothing but profit. Yes. So I know that my profit is 1,60,000. So my fixed cost will be how much? 2,40,000. Yes or no? Is everybody clear? Yes, Vrinda. Logical, no? Why did I do that? Selling price minus variable cost is equal to contribution. Yes or no? So contribution divided by sales into 100 if it is 50%. Then variable cost to sales will be how much? 100 minus PVR, yes or no? You want to test and try it? Say for example, the selling price, Vrinda, is ₹15. Your variable cost is 9. So what is your contribution? It is 6. What is your PVR ratio? 6 divided by 15 into 100 is how much? So I say variable cost to sales will be 60%. Because if PVR is 40, VC should be 60%. You want to check it out? VC is 9. 9 divided by 15 into 100 is 60%. Okay. Please explain PV ratio. Zia, after everything you are telling me, what is PV ratio? PV ratio is contribution divided by sales into 100. Cooper, you said you have understood everything. Then what do you want to understand in PV ratio? PV ratio is contribution divided by sales into 100. So if contribution, yes. Okay. So in the sum given here, they had given me in 2019, they have given me sales is 8 lakhs. They give me PVR is 50%. So if PVR is 50%, obviously VC, variable cost to sales ratio will be how much? 50%. Now do you understand the logic? Yes. They've also given me that MOS to sales is 40%. So I used that information, right? So if total sales is 8 lakhs, MOS sales will be how much? 8 lakhs into 40%, which is 3,20,000. Now, MOS sales is 3,20,000. From that, if I'm going to subtract the variable cost to minus karoge na to get the contribution. So your contribution is equal to 1,60,000. Beta, at MOS, contribution is equivalent to profit, yes or no? Because MOS is the sales after you break even. So after you break even, whatever you get is called as profit because at break even point all fixed costs are recovered. Yes. That means this contribution at MOS is nothing but profit. So once I know this, my sales were 8 lakhs. My variable cost was 4 lakh. So my total contribution was 4 lakh. My profit was 1.6. So I can get out with my fixed cost 2.4. Yes. The other way of doing it was if MOS to total sales is 40%, then break even to total sales will be 60%, yes or no? I could have done it like that also. That means 8 lakhs ka 60% is how much? 4.8 lakhs. Yes or no? At break even, contribution is equivalent to total fixed cost. Yes or no? I could have done that. So once I know my break even sales is 4,80,000, subtract the variable cost. I get out with contribution of 2.4 lakh. At break even, this contribution is equivalent to my total fixed cost. Yes, sir. You can do it either side. Yes. Yes, Sunil. I have taken it because the variable cost percentage is 50%. So from sales, you have to subtract 50% for variable cost. That's the way it is given. Am I good? Yes. So I think now, if you'll actually do it, things are easier for us. I know my fixed costs. Yes. Once I know my fixed costs, I know that what is going to be my sales. My profit volume ratio is 37.5%, right? That means variable cost will not change. Variable cost will not change. Variable cost has to be 4 lakhs only, because they say there has been a substantial savings in the fixed cost due to restructuring. The company could maintain its sales quantity level. That means whatever quantity we were selling in 2019, we'll sell it in 2020 also. So if the quantity is same, the variable cost will be the same. Yes or no? So if variable cost is the same, yes, the variable cost is the same, which is 4 lakhs. And now we know that our fixed cost is 2,40,000. Yes? It's 2,40,000. I hope you guys can actually use a little bit of your mathematics skills and not even looking as to how ICAI has done. If quantity is same, then variable cost will also remain same, because variable cost changes with quantity. That means in 2020 also, my variable cost will be 4 lakh. I know my total fixed cost is 2,40,000. That means my total cost of producing goods in 2020 is 6.4 lakhs. But if you look at it, your margin of safety has fallen down. As a percentage of total sales, it has fallen down. It has to fall down. It has to fall down. Why it has to fall down? Because if your selling price will reduce, automatically your profit volume ratio will reduce. Yes or no? So if profit volume ratio will reduce, automatically your break even will be at a higher level. So on a simple note, in 2020, my units are same. My profit volume ratio is 37.5%. Yes or no? Yes. That means, how do I solve my sum? You tell me. I know my total fixed cost is 2,40,000. I know my PVR ratio is 37.5. Can I find out my break even in rupee terms? I can. 2,40,000 divided by 37.5 into 100. How much does that come out to be? Beta, marginal costing is like a puzzle. Break even is 6,40,000. If break even sales is 6,40,000, now MOS is 21.875%. That means break even sales as a percentage to total sales will be how much? 100 minus 21.875. Yes or no? How much is it? 100 minus 21.875. 78.125. Yes or no? Now that means this 6,40,000 is equivalent to 78.125. So what will be total sales? It will be 6,40,000 divided by 78.125 into 100. It comes out to be some 8,19,200. I hope I'm clear. Guys, you need to go step by step, step by step. So look at it. Institute solves it for you. Variable cost is 50%. So variable cost in 2019 is 8 lakh, 50%, 4 lakh. In 2020, sales quantity is not changing. So variable cost will still be 4 lakh. So variable cost ratio in 2020 is 100 minus 37.5, which is 62.5, right? So they said that sales in 2020 is how much? 4 lakh divided by 62.5 is 6 lakh 40. Right? Now, this, how have they calculated? They've just done it with respect to variable cost as a percentage. In 2020, break-even sales would be how much? 100% minus 21.875% is 78.125. Now, what is it that I did wrong? What is it that I did wrong? What is it that I did wrong? I calculated my fixed costs, which was 2 lakh 40, and I took up my variable cost as 4 lakh. Yes or no? So my total figure was coming out as 6 lakh 40. Yes or no? Now that 6 lakh 40 was, according to me, fixed cost plus variable cost is the total cost. That is what I was taking up. Yes or no? But look at it. They are very clear. I didn't read the question. They say it maintains its quantity level. Quantity level is same, then automatically it's a very logical thing that if quantity level is same, your sales value will reduce or not? Because you're reducing the selling price. So if you're reducing the selling price, the percentage of variable cost is increasing because the sales quantity wise it's same. If quantity wise, if earlier you were selling 10,000 units, for example, what I'm trying to say is, if earlier I was selling 10,000 units and the selling price was 80 rupees, I was making 8 lakhs of sales. But here, if the quantity is still 10,000, but if the PVR ratio has fallen by 37.5%, that means definitely your sale price is reduced. Anyways, they have told you that is by reducing selling price. That means sales in 2020 cannot be more than 8 lakhs. It has to be lesser because quantity is same. So what mistake I did? I just equated the two things. I took up as a total cost. I took up variable cost per unit will remain the same. So value-wise, it will remain same, right? But the question is, as a percentage-wise, if it has fallen, then in that particular situation, we need to understand what is going to be the sales. Because this is not a per unit variable cost they have not given me. They have not given me variable cost per unit. Yes or no? Can you understand this? They have given me the percentage of variable cost, which is if you make a sales of 8 lakh, your variable cost is 4 lakh as a percentage, right? That means variable cost as a percentage of sales is 50%. So if units will be the same, right? Technically, we feel that variable cost, total variable cost should remain the same. It should be 4 lakhs. That's exactly and that's absolutely correct because variable cost unit wise will not be different. If it was 40 rupees per unit, again, it will remain 40 rupees per unit. But if the percentage earlier was 50% and now it is 37.5%, I think, guys, the question was very simple. We could have directly done it that what should have been the sales in 2020? It should have been only 6,40,000. Yes. I hope I'm clear. Yes. Now the second thing. Right. How I did the sum? When I did the sum, my fixed cost was coming out to be 2,40,000. I was wrong somewhere. Was I wrong somewhere? I need to find it out. Yes. Okay. Out of this 8 lakhs of sale, 40% is my margin of safety. Yes. That means out of this 8 lakhs, 3 lakh 20. Yeah. Either I have done a calculation. Sorry. Uh, 40%, that means my break-even sales. My break-even sales should be 60%, yes or no? So 8 lakh ka 60% is how much? Lakh 80. 8 lakh ka 60% happens to be 4 lakh 80. Yes. Now, from this, at this break-even point, the contribution which I get should be equivalent to the fixed cost, yes or no? Yes. So when I calculated it, 4,80,000 into 50%, 2,40,000. So we were absolutely right. The total fixed cost was 2,40,000 in 2019. We were not wrong. Total fixed cost in 2019 was 2,40,000 because from 4,80,000, if you subtract the variable cost of 2,40,000, you get out with a contribution of 2,40,000, and then 2,40,000 is the fixed cost. Then how come this fixed cost has changed? Because if you look at it, there is lot of savings in fixed cost in 2020 due to restructuring process. The question is very clear. The fixed cost is not 2,40,000 in year 2. It is lesser. It is not 2,40,000. It is lesser. I hope I'm very clear. We did not pay attention to the question. And I did that deliberately because I've been teaching from so much time, and I find out students, you have to look at the question and see to it. You can find out the answer in any way. I did not look at the ICAI solution. I did it my way. Yes or no? I found out my fixed costs, everything. But what I did not notice is that the fixed costs have changed substantially. They have reduced. I hope now I'm clear. Now, if fixed costs have reduced, what do you need to do? Anyways, now you knew the total sales of 2020, which is 6,40,000. You know that the percentage of margin of safety sales is 21.875. So what will be the percentage of break-even sales, which is 78.125. If you relate it, you'll be able to get out with your fixed cost, because 6,40,000 ka 78.1.5% is going to be 5 lakh, which is the break-even sales. From the break-even sales, you multiply and find out your PV ratio. The contribution at break-even sales is nothing but your fixed cost. And so you come to know that earlier your fixed costs were 2,40,000 and now they are 1,87,500. Am I good? Right. Vivek, please pay attention to the amount of theory I stick to. You look at it, I don't even read a lot of things. Right? Okay, very clear. I have done it intentionally. Ria, you have to do it intentionally in order to understand the concept. And Ria, if I can't help it, you have to understand the concept, because you have to understand. I have been looking at students that, ma'am, why was it not there? Guys, you can follow and you can do it in variety of ways, Ria. Right? You have to do it in variety of ways. It is not essential that I do it like this. I am a student in the examination hall. I may not directly start with the way ICAI has done it. It will not strike to me. I may end up calculating the fixed cost. Yes, Ria. So if I end up calculating the fixed cost and then I forget that here it has been written that restructuring costs are there and fixed costs have reduced, I will solve it the way I have solved it. I have solved it correctly. But what I forgot was that it is very clear that fixed costs are not remaining same. So Ria, you need to understand this concept. Yes? Okay. See, now this is what I'm trying to tell you. You guys are not ready to change the method of understanding. You want to stick to a particular line and then you want to say that, okay, I want to be a chartered accountant. How? I'm trying to explain you that, okay, I did not even look at what ICAI has done. I did it my way. I first explained to you that if PV ratio is 50%, VC ratio should be 50%. Then we tried to calculate, we calculated our fixed cost. Then we forgot all about the question. We forgot all about the question. We just did it in 2020. And where we got out with the answer of some 8,90,000. And the student is like, I've done it correctly. But what has to strike to you is they are very clear. There is a saving in fixed cost. They are very clear, quantity same. So the thing should logically strike to you that if quantity is same, variable cost will remain same. The moment it strikes to you that if quantity is same, variable cost will be same, then you will be smart enough to calculate that if variable cost is the same, it is 4 lakh, but PV ratio is now 37.5, then automatically VC ratio will be how much? 100 minus 37.5, which is going to be 62.5, and you'll get the sales. Okay, right. Okay. Now, so guys, now we will be taking up graphical representation in the next class. So till now, whatever I have taught to you is absolutely clear. We did concept of VC ratio, PVR ratio, break-even point, MOS, the concept of marginal costing. In the next class, which is on 3rd of December, we will be talking about the graphical representation, limiting factors, and some more questions. Yeah. Thank you so much. The session is concluded.